Hey everybody, it's Pete. Welcome to Stock Trading Pro. Today we got some really big news for you. We're actually going to take the shortened week that we just had, which was just an amazing rally last week. But the hottest sector on Wall Street, probably the hottest sector for the last 5 months, just got the kiss of death from Investors Business Daily by putting them on the cover over the weekend. So we're actually going to talk about that as well. We're actually going to work our way through the market, why you should have made last week a lot more than normal, and we're going to do sector rotation. We're going to start out with the market with the SPY, the NASDAQ, and the S&P. We're going to break it down a little bit further into the sectors, and then after we go to the sectors, we're going to break it all the way down to industry groups and individual stock picks. So we have a lot of stuff to talk about today, but I think probably the number one thing that we're going to discuss today is timing. Timing last week was just absolutely amazing week to be an active trader. This week, we're going to be a little bit challenged with profit potential. There's a big difference between whether or not stocks are obvious and whether or not right now is the right time to buy them. And if you've been a regular viewer of the channel, you know that we talk about something called the optimal entry. And the optimal entry is the place that as soon as you're about to hit buy, it is the greatest potential or the likely potential for profit. Now, a lot of people see a lot of really good ideas. I'm actually just going to pull up one chart just to really give you an example of what we're talking about right now. We'll kind of hop on over into the daily chart, and we're going to take a look at two of them. The first one's going to end up being General Electric, and the second one is going to be the airline stock. So we're going to talk about United Airlines and American Airlines last week. There's not even a question whether or not they're obvious and whether or not they're bullish. But the real question on the table right now is right now the time to be buying those stocks? It really depends on your time frame. So we call these ideas bullish echoes. Bullish echo is something that is clearly a buying opportunity, but too far from the optimal entry for a new swing trade. But if you're a day trader, you can still take advantage of that recent bullish bias. So swing traders in these stocks that have really gone up, I believe that United Airlines alone in the last 7 or 8 days has gone up almost 39% in 7 trading days. Has earnings after the close today, so you got to keep an eye on that as well. We're also going to take a look and see if Morgan Stanley and Goldman Sachs actually reported. We're going to put those into the mix today as well. But I think the big thing is we're also going to break down the recent price action and how the market is going from bearish to neutral to really turning on the afterburners right now. And one particular chart in the S&P 500 using the SPY ETF, we're right on the precipice of really kind of like declaring that that bear market is over if we crack that level, which is really where we are sitting on right now. So we got a bunch of stuff that we're going to review. We're actually going to go through the newsletter, the daily ticker newsletter that we put out every day. And before I forget, if you want to get my daily research every day, our 14-day bootcamp actually starts today. So click that link below and in the description and look to see what it's about. If it's for you, fantastic. If it's not, that's okay too. We have plenty of people in there right now as well. So stick around. We're going to be back in just 1 second. Okay, so we got a bunch of stuff to talk about. I want to say good morning. Hey, Roberto, how's it going? Good morning. Good morning. Oh, Michael Hollis, good morning. I heard you might be joining us in Order Flow Pro in our annual membership. I'm really looking forward to working with you over the next 12 months. So what we want to do first is we want to break things down, starting out with the big picture. And that's actually where everything starts, which is working your way through market and sector rotation. So you can actually see here, if we kind of zoom this out a little bit further, we actually break it down by sector. And let me actually make that a little bit bigger so it's kind of easy to see. You can see that basic materials now has kind of floated to the top over the last couple of weeks. But I think the one that is probably the biggest surprise from last week is technology. Technology just vaulted to this top of the list right now. And you can see actually here 5.58%. Now, the reason that that's a little bit strange is because technology or growth stocks have to have capital to expand for the most part, right? Which means they need to borrow money. Now, this is really where the market price action versus the market headlines kind of clash, and you have to pay attention to the price action and not so much the headlines, which is actually going to kind of bring me into the next point that I want to make. But I want to stick first on technology stocks. technology stocks, and specifically diving one step deeper into the semiconductor stocks, have just been absolutely lights out bullish over the last couple of weeks. Now, the big story about the technology stocks right now, and specifically semiconductors, is bringing that manufacturing home, which has been a lot of articles that you've probably seen in your favorite publications, right? That's a short-term play right now. Until interest rates start to slow down and or even reverse, technology is going to have a pretty strong headwind that it's going to be banging its head against, but it's a really nice start for the recent price action. Just remember, longer-term plays in technology right now, even though those headlines in semiconductors are fantastic, they really need to see interest rates at least stop going up, never mind reversing. So what I'm looking for on the technology side of things, and I'll give you a couple of stocks in just a second. We'll actually pull up the sheet. I'm waiting to see that happen, and then I'm going to be starting to build some positions longer term. So I just want to walk you through one of the lists. So if you're looking for some new bullish stocks right now, some of the best stocks to buy right now, this is going to be the area that I'd be focusing on. So not only technology, but TSM, Nvidia, AMD. See, Nvidia was up almost 14% last week. AMD rallied, but not as strong. This is also an area we're going to be keeping an eye on over here. Credit services, more MasterCard and Visa just broke out. PayPal had an upgrade about a week and a half ago. Actually, let me see. I'm not sure. You probably can't see PayPal. Let me get myself off the screen there. Right over here. So American Express and PayPal. The one area of the market that is showing some relative weakness is actually over here in consumer defensive and healthcare. We're actually going to take a look at that in a second. So what I mean by that, showing relative weakness and why that's important. You've probably heard of something called hedging, right? So let's say, for argument's sake, you have ideas where the stocks are going up, right? You got some really nice profits on those trades and you don't want to get out of them, but you kind of look at the market and you're like, wow, the market's kind of at this level. And I'll show you what that level is in just 1 second. There might be a chance, and probably a good chance, that the market's going to pull back a little bit before it kind of resets into the next optimal entry. So you got to be thinking to yourself, what would I do if I don't want to get out of these good ideas or the good trades that I'm in right now? How can I protect some of that profit even if the market goes down? And there's something called relative weakness. Relative weakness is a very simple scan that you could run, which basically says if the market went up, which stocks did not go up? So the theory behind it, and actually the practical application of it, is if those stocks did not go up when the market rallied, that should see those stocks go down the strongest if the market pulls back a little bit and sees some profit taking. So right now, the primary stocks that meet that criteria are healthcare stocks and a couple of consumer defensive stocks. I'm going to show you those stocks right now. Actually, we're going to break that down in the rotation. So you could actually see here last week, and especially over the last month, healthcare has been a little bit weak. But what I want to do first is I want to take you over here into this story. It's kind of, I'm sure everybody's heard buy the rumor, sell the news, that kind of thing, right? So the cover of Investors Business Daily this weekend was actually this picture of Caterpillar talking about how the industrial stocks and how much more of the $1 trillion government tailwind they have to see these stocks rally. Now, if you are a regular subscriber of our channel, you know I've been kind of banging on the table that industrial stocks have been leading the pack for months, and it's really not that complicated. It really just means having a structure, having a system to pay attention to first the market and then sector rotation. And in that sector rotation, I'm going to use a word here, just don't take it too literally, but the easier ideas to spot have been in the industrial group, specifically General Electric and Boeing. Caterpillar just recently broke out as well. Now, here's the next step. Now, one of the biggest things that we talk about in our program, which is pick a side, then pick a spot. So the side of these industrial stocks has been really, really obvious. They've been really marching higher and just burning the jets to the upside. But now we have to be talking about two different things. How far are they from the optimal entry for a new entry today, maybe even this week? And even if you do have a new entry right now, how much profit potential do they have if you pick up that trade right now? So this is really where a lot of traders, smart traders, hardworking traders are like, man, I was in the right stock, but why didn't I make money? As soon as I buy that thing, it reverses. So you got to take it just that one step further, pick a side, then pick a spot. and the best spot is the optimal entry. Now, again, you know that stocks have a certain average true move. The optimal entry is if you're about to hit that buy button, how far is it from the optimal entry based on what it normally does? So it's kind of interesting here. And again, obviously joking around, I love Investors Business Daily, is that it kind of put the kiss of death on the industrial sector after they've already rallied for 4 months. So I'm actually going to show you that right now. So we actually kind of see this, right? Obviously the story here, and you can actually see if we go a little bit deeper here into industrials, you can see that they've actually been relatively strong across the board, right? But here's where it gets kind of interesting. If we kind of take a look at, let's say, General Electric, clearly General Electric is well beyond what it normally does, and it's coming into this wall of resistance, right? Boeing, we kind of zoom out and see the same exact thing, and there's a little bit of room up to go here, but a much more areas where sellers came in to this particular stock. And we kind of zoom out here on Caterpillar. Caterpillar is the one that's actually, if we zoom out a little bit further and go out to the monthly charts, Caterpillar is actually now sitting at all-time highs. So Caterpillar on the recent breakout might have a little bit more room to go compared to the other ones that have been kind of getting the headlines. But now you got to actually ask yourself, how much more room to go does Caterpillar have after having this 4-month rally, which has basically been vertical? So I just want to make sure that you take this one step further than just, I like the stock, I want to buy it. You have to ask yourself, if I accept risk on this idea right now, is the profit potential that makes taking that risk worth it right now? So all you need to do is look to the left and take a look and say, what does this stock normally do? And if I hit buy right now, is it worth it? So again, it's kind of like the jinx, the sell the news kind of thing, buy the rumor, sell the news. Not exactly a rumor that industrial stocks have been going up, but I think it's kind of interesting the timing of that headline coming out 4 months after they have been rallying. Okay. So now we're going to work our way through some more ideas in here. And if you have any ideas that you're looking at this week, please feel free to post that in the comments. We'll actually take a look at that one as well. But what I really want to do now is I want to talk about something different. I want to kind of go off the beaten path just a little bit here. And I want to talk about, we spend a lot of time discussing PPC, something that we talk about a lot, which is preserve precious capital, right? It's probably the number one thing that we do as active traders. We're going to manage our own money. We need to be able to make decisions. And the number one decision is understanding, how do I preserve my capital on those market opportunities where it's kind of less than perfect, right? And that's really where we spend a lot of time. However, you might be complaining about, oh, these paper cuts, death by 1,000 cuts. When am I going to have the big winner, right? Well, last week you should have got it. Last week there were so many stocks that opened near the low and closed near the high for the entire week that last week should have paid for the entire month of January if you recognized it in the moment, which is actually what I want to walk you through right now, because we're going to hop on over into the newsletter. Okay, so we're actually going to make this just a little bit bigger so it's a little bit easier to read. So again, I want to be clear about this. This is the research that I provide for our community every day. And it always starts with getting a feel for what the market's doing, putting an analysis on what is the market doing, and more importantly, what kind of opportunity are we looking at each day and each week? Because again, one of the biggest things that I think that we kind of don't admit, for lack of a better way of putting it, is we do all of this kind of really hard research and technical analysis, and we put all these trades together. We have all that information right up to the trade, right? But then we forget that the market's still allowed to move after we put the trade on. So that's actually what we're going to kind of break down right now. Okay. All right. So stocks roared higher last week after economic data. Actually, let me pop that in there for Greg. Greg, this one that we use on these charts right here is Tradingview. So let me actually pop that in there for you. Right there. That is Tradingview. And actually, by the way, Tradingview, the tradingview.com trading platform, very, very inexpensive, but really, really good. If you're new to trading the markets, not even just necessarily stocks, they have all different asset classes in there. If you're new to trading the markets, Tradingview is a very inexpensive and easy to use platform for learning how to build your charts. Now, there's different levels of memberships in there. You probably want to start out with, I think the pro one is something like $350 for the entire year. It's well worth it. If you're active trading, though, make sure you have real-time quotes, because you don't want to be trading on delayed data. Okay. All right. So I think what we want to do now is we want to work our way through. Stocks roared higher last week. Now remember the context of what we're talking about. We're building an argument for what kind of risk we're going to be taking during the week. Okay. And actually, let me take a look at this guy right here, alleged crimes. I think by Thursday we're headed down. I do not disagree with you. That's actually the point that we're going to make today. So thank you for that participation. I really appreciate that. Stocks roared higher last week after economic data validated inflation slowing down, right? It's starting to come off that peak. This created a sense of relief for traders, implying that the Fed will slow down the historic interest rate increase. So what we're essentially saying right now is the reason we rallied last week is traders and Wall Street in general got some positive feedback that the inflation numbers pulled back a little bit. Then you had the employment data mixed in there as well, right? So the entire market right now is waiting to see if and when the Fed stops raising aggressively, if not finally eventually gets to the point where they start to decrease. Now, if you listen to Jerome Powell, he's super clear they are not decreasing and they're going to keep increasing. However, if you could think about stepping on the gas for your car and you kind of let off the gas, the car's still going forward, right? So that's kind of what's going on right now is the interest rate hikes are still going up, but inflation's coming down. So we're kind of seeing the momentum slow down on the bearish reasons that the market rolled over. So if we kind of tie that into the bigger picture of the S&P 500. So if we kind of zoom this out over here and we take a look at this on the weekly chart, which is kind of clear to see right here, right? So here's the start of 2022. Here's 2021. You can actually see that we are right at a really, really important inflection point in the market. And what's even more significant is this higher low right now. So I want to be clear about what this means. I am not saying that the market is definitely going up right now. What I am saying is the tone of the bearish sentiment has changed dramatically. So all of those negative headlines that you're reading, everything that's putting out there that's probably scaring you out of your shorts right now, it's important to do that research and important to read as much as possible. However, you still need to pay attention to the price action, which is something that we call tape reading. Remember, there's two parts to the trade. The first part is the order flow, which is it obvious? Is there a dominant side to the market, and is it obvious? Now, right now, looking at that chart, you can clearly see that that big line is still pointing to the downside, and it's got these beautiful touching points where every time it hits this line, sellers come back in and shove the stocks back down. But here's the thing. When we're talking about this level from here to here, we're literally talking about where it stopped. It stopped going down. It stopped pushing down new lows. So what should happen is if you rally and push down, that new push down should create new lows if the conditions are the same. So what everybody in the market is perceiving right now is inflation peaked at that 9.2% or whatever that number is, and each successive reading has been lower. So what's going on right now is you have to remember that the market discounts into the future. Despite all of the negative headlines, despite the fact that the FOMC right now is saying, hey, listen to what I'm saying, I am not going to decrease, and I'm certainly not going to stop. They might be saying that, but the stock market, as of this moment, is discounting some point in the future where even if they continue to raise at the pace that they've been going, the signs of a reversal are there, and that's why we rallied last week. So we have those signs of a market rally and this really big inflection point in the market right now, where if we can get above this level, that is finally going to be breaking the back of the 2022 bear market. Now, remember what I just said, and remember why we're looking at this and why we're mapping this out. What you need to do, what I need to do basically every single day is we need to map out what kind of risk should I be accepting right now based on the way the market's unfolding. Clearly, we are still in what we call bearish order flow, which means the dominant side of the market is more selling pressure. But there's the second part of that equation. Again, and this is all the stuff that we talk about in the boot camp. If you want to join me in the boot camp, click the link below the video. At least click through there and learn what it's all about. It might be for you, it might not be, might not be. We got a bunch of testimonials on there and member results. Here's the second part. Is it obvious, and is it still valid? And that's the big thing that we should all be keeping an eye on this week. And really, let's just say January, is whether or not this line finally breaks. Now, we're going to take that even a step further. We're going to bring this down into the daily chart, and we're going to throw some volume in there because we really want to map this out. This day right here, which was 2 Fridays ago, and this big volume day is one of the first what we call accumulation days in the market. So we had one there, and then we had another one here. So what we are looking for in the big picture of the market and that big downtrend that we have right now, I'm not saying ignore the headlines as much as I'm saying pay attention to price and volume. If the S&P 500 can punch through this big bearish move to the downside, let's just kind of map that out again. If we could punch through this line and do so on big volume, which would basically mean, can the S&P 500 have a big green day through 400 to the upside and have good volume and close near the high? It's pretty simple, right? Can the S&P 500 have a big green candle on big volume above 400? You want to keep that on your monitor, take the Post-it pad, write it on there and say, that's what we're looking for. Because remember, everything that we do, it's not about predicting. You don't want to predict. You want to say, okay, here's the way it's unfolding. If this happens, then I plan to do this. So if we map this out right now, if the S&P 500 on that chart holds this resistance level, which is that big downtrend line from 2022, okay, I'm going to trade for a little bit shorter time frame profits because the upside sellers just came right back in. And that's okay. And I'm going to walk you through some ideas, as I just showed you, of ideas that are still bullish and worth your attention right now. However, if that level holds and kind of just pauses and we eventually punch through to the upside with that big green candle, big volume, then the second part of the basic equation of profitable trading is it still valid? Well, then at that point, that big move to the downside is no longer valid. And now we're cooking with gas and we can start to lean into some of those ideas. So I just want to put that up on the screen for you. Again, this is a list of some stocks that you probably want to take a screenshot of because these stocks are showing relative strength over, I believe this is over the last week or so. And you can see some of the tech stocks in here. Okay. But now here's really the big important lesson that I want to get across. Okay. Because I feel your pain. I'm in there with you all the time. Oh, all these small losses, they're a pain in the butt. I hate all these small losses. When am I going to make some money? Well, last week you should have. And I'm going to walk you through what to be thinking next time and how to prepare for it. Okay, this is really, really important. And then we're going to work our way all the way down into some sector-specific and stock-specific ideas. My pick of the day today actually is a short sale in a technology stock that's actually showing relative weakness to the market right now. So I'm actually leaning on that resistance level holding, and I'll walk you through what that looks like in a second. So first, actually, I just want to take a quick look. I believe that Morgan Stanley, and I don't know if they came out yet, Morgan Stanley and Goldman Sachs actually have earnings after, it looks like Goldman Sachs is getting hit pretty hard. So keep an eye on that. So I just want to give you a little bit of an insight on that as well. We're kind of throwing everything out there to start the week. These earnings related plays have been a very easy price action to read after the earnings report has come out. So if you happen to like to trade that short-term volatility, what we've been finding a little bit easier to do is let the earnings play itself out. And then the next day, look for where it trades over the next 3 months heading into the next earnings report. Look, I got a lot of gray hair. I don't want any more. I like trading to be a lot less stressful. That's one of the ways that I've been trading earnings reports without kind of jumping in, jumping out, and guessing what's going to happen on the earnings. So let's kind of work our way through the research document, okay, and get a little bit deeper into what we're talking about. So with earnings season kicking in, as we just discussed, and the next FOMC decision in 2 weeks, which is at the end of January into February, things are setting up well for active traders. Chip stocks and the goal of domestic manufacturing added an extra kick to the bullish frenzy. Nvidia nearly 14% last week. So again, want to make sure that you are keeping an eye on. Look at that. Look at the last week or so in Nvidia. 1, 2, 3, 4, 5, 6 green candles in a row, closed on the high again, has some more room to go. Boy, these are just some ideas that you really need to be on top of last week. Okay. And by the way, I will post the link to this document in the description below the video. Okay. I haven't done it yet. I'll post it below the video. Okay. The challenge we face this week. So again, we're building the argument for what kind of risk we want to accept this week. Very, very important, right? Comes in the form of profit potential. Remember, if we choose to accept risk, if we choose to put a trade on, we have to weigh the risk that we accept and the likely profit on the next move. We never want to limit what a stock can do, but we do have to have some sort of initial profit target based on if I'm about to hit that buy button. Okay, so this is what we're really talking about, building that argument for the week. Okay, a deep dive into today's new trade shows many stocks far beyond the optimal entry or facing strong resistance. And we actually walked you through those stocks, Boeing and General Electric, which were not only near resistance, but also well beyond the optimal entry. And you can actually see here in UAL and in DAL, both of them are way beyond what they normally do, especially UAL. Way beyond. I believe this is a 39 or 40% move. If you kind of zoom out a little bit further, you can see this is the exact spot where sellers continue to come in and knock the stock down. So again, not necessarily the best idea right now. Beyond that level, or maybe even a pullback sets up a little bit better trade there. Okay. This likely sets up a need for a pause before the risk reward looks better. So again, we're mapping out the reasons to accept risk if we do. We'll still find solid ideas. We just need to go deeper into sector rotation. So we're going to work our way down into that. So now here's the important point, which brings us to the coming complaint that I'll hear from new traders this week. If the market needs a couple of days to rest, rookies will complain, it's too slow, right? And at that moment, they might be right, but they're focusing on the wrong moment. Now, this is really a big lesson here that everybody really needs to absorb and take advantage of, all right? Last week was amazing with a capital A. And here's the question. Did you get paid? That's the question. Did you get paid this week? Better yet, did you get paid well? Now I'm going to explain what I mean by that, okay? We spend so much time, and deservedly so, on risk management and preserving capital, but once in a while, a perfect scenario unfolds and you need to see it in the moment. Now, here's the big thing. Raise your hand if you're really good at seeing perfect trades at 9 o'clock at night, 5 hours after the market closes, and you get angry with yourself and you're like, why can't I see this during the market? Why can't I see this when it's the right play? That's what we need to overcome as a community. Now, the reason, and I'm telling you, there's two big reasons why you don't see it in the moment. Number one is you're watching too many stocks and your focus is scattered for where you are right now and your skill as an active trader. And number two is you don't have a clear strategy. Now, when I say clear strategy means that's what I'm looking for, and that's the only thing I'm looking for. When your strategy is that narrow, you're never lost again. Because when it's there, it's obvious, and when it's not there, you don't do anything. But last week it was obvious, last week it was there, and last week, as we say in our community, last week was the time to belly up to the bar. It was time to get paid and get paid in a big way. So if you missed it last week, it's one of those two things that you need to go back into your notes and ask yourself why you didn't make more last week. Bigger gains on those same trades, okay? All right. So the same way that you need to see less than perfect, you need to be ready for stacked order flow, which is what we had last week. And when it's there, it's required that you increase your expectations, okay? Bigger position size, hold trades longer, in the best scenario, both. This is when you need a coach or a community, kind of like we're doing right here on YouTube right now. Sometimes you need someone to hold you accountable and someone who provides context. Anyone can recognize when it's choppy, when the stock market's going back and forth and it's easy to complain. But did you get bigger last week? Did you hold longer last week? And did you hold more and make more last week? If you didn't, you have to ask yourself why. Okay. Maybe that $3,000 week wasn't so good if $5,000 was available on those same trades. Context is everything. You might say, but I did good. Don't rain on my parade. Yeah, maybe you did, but you need those big wins to overcome all those small, pain in the tail, annoying losses. Otherwise, you'll remain a break-even trader if you don't understand when more is on the table. And again, we talk about this all the time as if you were driving. You need to understand when you're in stop and go traffic, and you need to understand when the road is wide open. You could turn up the radio and step on the gas. Last week was a moment for that to happen, okay? So we spotted the problem. That's stage one. Now, working on the solution is the next thing to do. Ask yourself, how can I see it next time in the moment? This is the big thing right here. I'm going to highlight this right now. In the moment. That is the big thing right there. Let me highlight that. I'll give everybody this document. I'll post this below the video, right? And more importantly, how do I trade it? It's great to pat yourself on the back for managing risk, but we're here to make money. You need to grab it when it's there. So that's a very, very important thing. And I wanted to challenge everybody right now. It's the first trading day of the week. We're into the first month of the year. It's January 2023. Ask yourself, is your strategy specific enough that you could recognize when it's perfect and you have a plan in place to trade a little bigger and hold a little longer? And is your strategy specific enough where it's hard to find because you know what you're looking at, and it's hard to find because it's not there? Two very, very simple concepts, but you need to pour yourself a coffee on a Saturday, sit down with a legal pad, and start to write out, what does perfect look like for me and how do I trade it? You start to do those kind of things, and all of a sudden, those same trades that you had taken before, your timing's a little bit better. You hold them a little bit longer. You stay out of situations that aren't that good because you're like, well, if I buy this here, what are the odds of me making a profit? And sometimes it's screaming at you, don't do it, because there's nothing to do. It's in those moments of indecision that you get a grip of yourself and you say, no, the right thing to do right now is nothing. Or the right thing to do right now is hold on to this thing because there's no reason to get out. All of that. Winning trading happens because you know what you need to do before you need to do it. Again, raise your hand if you've emotionally gotten out of a good trade simply because you wanted to book the profit. That just means that if that happens, you need to write down what the situation is and when and how you would learn to hold those situations longer. In our community, we call that the profit maximizer. We have two different kinds, one of them for momentum situations and one of them when everything is lining up perfectly, the sun is shining in, and we hold those a little longer, which are called the trend profit maximizer. Okay, so we're going to break this down just a little bit deeper. We have some stocks in here on sector rotation. You can actually see this breakdown. We talked about tech. We've been watching Meta. Hopefully, you've been on top of Meta recently as well. Meta has actually broken out of this really, really clean consolidation here. Now, the challenge in Meta, you can see it's actually down a little bit. The next trade in Meta for me is going to be over 138. So basically 138 to 156. And you can see the sellers at this level came back in, and so far pre-market are pushing it down. And you can see as we work our way through, we just talked about the industrial stocks. We talked about General Electric. Financials, we just talked about Goldman Sachs reported, it looks like, and that's actually taking a hit this morning. Morgan Stanley coming out. The one big financial stock that is actually near the top of my list is actually JP Morgan, pulling back a little bit, but look at the way it traded on Friday after opening lower and coming back. So remember what we talked about. Pay attention to the price action, not the headlines. The headlines might be a catalyst, but the market is speaking to you based on how it's trading after that news. Okay, so you can actually see here the rotation in the market. However, remember, we talked about hedging, right? If you need a list of stocks to hedge or sell short, consumer defense stocks, specifically Pepsi, CNC, and PFE. So I want to really just bring that home in a big way here for you right now. So you can see the bearish breakdown here in Pepsi, consistently making lower highs, consistently making lower lows. It has all this room to go to the next big support level. Same thing with CNC and same thing with Pfizer, bearish, right? So I don't want the market to go down. I actually want the stock market to go up. However, getting back to planning and a term called hedging. These stocks that I just mentioned were already weak while the market was going up. Therefore, if that big line in the market finds resistance and the market pulls back a little bit, those stocks that were already weak when the market was rallying should have the biggest move to the downside. So those are stocks that you would consider short selling, betting on them going down to protect the profits on the other trades that you have. It's a little bit of an advanced strategy, and we talk about that a lot in our annual program, which is called Order Flow Pro. I don't want to confuse you because it's a little bit too much, but I want to throw the idea out there for those of you that are advanced enough to hop on that. So if we work our way through the list a little bit deeper and we get into individual industry groups, you can see that we have SQ and Oracle in software industry, software infrastructure within technology. And then obviously the semiconductors have won by a country mile. We have here TSM, Nvidia, and AMD. Credit services, MasterCard, Visa, and PayPal all showing good bullish order flow last week. And internet retail, got to fix that. Internet retail marched higher. Amazon had a really big week, and obviously everything related to China is seeing some buying pressure as well. Working our way a little bit deeper into the industry groups, oil and gas equipment, Schlumberger and Halliburton actually showing some pretty decent bullish order flow recently as well. So you can see the Schlumberger breakout and the Halliburton, excuse me, HAL, this guy right here, Halliburton breakout as well. So there's also a stock pick in there, which is a technology stock. So what I'm going to do is I'm actually going to post the link to this document and put it in the description below the video. Big thing I want to get across here today, right? Amazing, amazing price action last week. Don't complain about it if you missed it. Go to work, post-it pad, notepad, timeout, put your phone on airplane mode. Ask yourself, why did I miss it? And how do I make sure I get it next time? Don't get mad. Get profitable. Don't get mad. Get better. If you need my help, I'd love to help you. We got a bunch of people here on the call with us right now that are actually existing in our community right now. Click the link below, learn about the boot camp. Today's the final call to get into this one. It actually starts today. All right. So I'll post this link below the video. Have an awesome week, everybody. If we did a good job today, do me a favor, hit that subscribe button and hit that thumbs up button. Have an awesome week. Take care now.